Fantastic. Thank you, everybody. This is the last session of the day, and we're going to finish on a nice, light, easy topic like interoperability. So you can consider the first few sessions as a warm-up to get to the hard stuff. So the session structure, just to give you a quick idea of what it will look like, we're going to kick off with a presentation, and that will sort of be the fuel for the fire for about a half an hour discussion amongst the panelists to hear their thoughts on the presentation as well as their own context around interoperability, the challenges around a particular use case, and some opportunities with innovative models. And then we will conclude with 10 minutes or so of questions. So my name is Ahmed Dermish from Bankable Frontiers, and I'd like to invite the panelists to introduce themselves, and then we can kick off from there. Gunnar?
Sure. My name is Gunnar Kamler. I'm on the MMU team at GSMA, where I focus on interoperability.
Great, thanks. Paul?
Hi, I'm Paul Makin. Oh, my microphone's working.
Yeah.
I'm head of mobile money at Consult Hyperion. We're an unusual consultancy in that we're split roughly half and half between consultants and developers, so we actually build stuff to stand behind our hot air.
Great. My name is Michel Hanouche, and I work in the technology and business model innovation team at CGAP. For those of you unfamiliar with CGAP, we work to advance financial inclusion for the world's poor.
Great, thanks, gentlemen. So I'd like to invite Gunnar to give us a quick presentation on Indonesia and what's happening there in interoperability.
Cool. So we at the GSMA, or the MMU team at the GSMA, we work on two areas in interoperability and mobile money. And the first one is we want to see mobile money platforms become real platforms, so that we want to see more companies that use them to accept payments and to disperse payments. And with some numbers, I think Kenya is leading that area right now, and it's known for send money home, M-Pesa, but it's also increasingly used by companies to reach customers and customers to pay companies. And I think the numbers is that there's now 1,500 companies that are on the M-Pesa platform. And it's the fastest growing segment of that type of transaction. It's the fastest growing segment of transactions in Kenya today for M-Pesa. But the other area where we work on is to make sure that money can be moved across mobile money schemes and across mobile money schemes and banks. And I think what has happened in the last year or so is that the conversation has been more on, well, how can this happen, rather than why should this happen? I think the industry realizes that this should happen, but now it's more about figuring out, well, what are the operational agreements that we need to put in place? What technology should we use? What are the commercial model that should be applied in this case? And I think the challenge that operators are facing is that you want to do that while you maintain the attributes of mobile money that makes it successful, which is it's low cost, it's real time, it's low risk, and it's easy to access for customers. And one way to try and figure out how to achieve this is to look at what's happening in the industry. And so I'm going to take a couple of minutes just to show you guys what 3 operators in Indonesia launched earlier this year. So a bit of background in Indonesia. There's 3 operators that are dominating the market, and each of them have launched in the last few years a mobile money scheme. But just until recently this year, it was actually, or regulation prevented it to be an attractive proposition for customers because you were not allowed to cash out. But that changed in March this year. So it's been a bit of a relaunch in the market, and because of this relaunch, the operators decided to, or they announced that you now can transact money between 3 separate independent mobile money schemes. So we can look at how this happened. I think it's important to realize that this was backed by the top of the 3 operators. So it was actually the CEOs that got together and started to discuss, well, what do we mean by interoperability? What do we want to see in the market? What should we prioritize? So they said, well, first, let's allow direct credit transaction to apply to across our three schemes. So a wallet-to-wallet or account-to-account interoperability. The second one was that they allowed airtime purchases to be made from any wallet. So you can buy any airtime from any of the wallets that you're using. And the third one is they have a plan to roll out a common solution for retail payments. And I think this really helps focus the work that they're doing, and it also removes some of the connotations that interoperability has elsewhere. So in other markets, people are talking about sharing the sales and distribution channel, and this was too complicated to include in the Indonesian environment, so it was left out. And maybe it will be brought back into the roadmap. I think we'll have to wait and see what's happening there. And in implementation, the task force was created that was in charge of driving this across the three operators. So you had the head of the mobile money teams in each scheme, really going to make sure that every department in the organization that was affected by money flowing between schemes really solved all the issues and was prepared to handle all the issues that are introduced. So what does the solution look like? In brief, they developed a common protocol to allow the three platforms to communicate directly with each other. So since mobile money is fully prepaid, it's a fully prepaid low-risk environment, they just managed to have or if the platforms can communicate and you open accounts in each platform, there's very low risk for settlement because each operator prepays at the other operator's platforms. So there's no real settlement risk that is introduced in this case. And since it's prepaid and the communication protocol is in real time, the transactions go in real time. And since they developed this protocol from scratch, they could allow some nice features such as, well, if I want to send money to Ahmed, I send money to his number, it replies back to me and say, well, do you really want to send $50 to Ahmed? Yes or no, enter your PIN. So certain nice features could be built into the user experience. And because of how the development was structured, they were able to launch this in a pilot phase just after 4 months, and a pilot phase lasted for 2 months. So they went actually live just only after 6 months of the first CEO meeting, which is quite remarkable, I think. And then, again, just as it's up to each scheme to have its own sales and distribution, it's up to each scheme to connect to banks and to ATM switches and so on. So that's an area of competition. Just as sales and distribution is an area of competition for them. But I think just to finish off, I think it's still very early days in Indonesia. So even though I think it's impressive what they have achieved on the interoperability side, they have a really long way ahead of them into making mobile money successful and really penetrate their user base in the country. So they have a lot of issues ahead of them. But at least now the industry has an example of how money can be transferred across different mobile money schemes in real time, which we didn't have at the beginning of this year.
Great. Thanks a lot, Gunnar. So with that context in mind, we kind of have this, just you sort of concluded, this unique circumstance where the very early stages of mobile money developing in a market, you don't only see a relative solution, but you see a degree of collaboration, which is somewhat unprecedented in other markets. And what's important to note is, Indonesia is not an uncomplex market in itself. Huge population, embedded industries on the mobile side and on the financial sector side. So, the fact that this could happen in a relatively formalized manner in the early stages of development is sort of fascinating. But Paul and Michelle, I'd like to hear your thoughts from your experiences on the Indonesian context, and then we can perhaps dive into a broader set of questions, particularly because you both come from different angles and each seeing a lot of different models, and what it takes to make them work. I'll kick off, I'd love to hear your thoughts, but is this possible to see in other markets? Is this an outlier? What are your thoughts on Indonesia?
Sure. I'll kick off with just a comment on the way the fees flows, which I find is interesting, right? So with the money flowing, the MNO of the sender charges their customer a fee, and then that fee gets split, if I understand correctly, with the MNO of the recipient, and that's kind of almost mimics the way it works in the telco world, right? Whereas in the banking world, it works the other way around, and in the kind of mobile money world, it works the other way around as well, where to get money into your system, you typically have to pay for it. So I guess it's kind of unclear to me whether I see kind of three options here. On the one hand, we've got this Indonesian option, where you're kind of getting paid to get money into your system, which sounds great. The customer's paying. There's an option in the middle, which I think they're trying to do in Nigeria, which is they've got this kind of technical interoperability, and there's no interchange fee. So the recipient doesn't, the recipient MNO doesn't earn anything, but he doesn't pay anything. And then you've got the kind of the other end of the spectrum, which is, the recipient MNO should be paying for something here, and that kind of relieves some of the pressure on what you need to charge the customer for the off-us transaction. Mm-hmm. So I guess just maybe these three options, and which one we see, and this is for the audience as well, which one we see kind of having the most traction or being the most relevant in different types of markets.
Okay, one of the other unusual things about working for Consult Hyperion is we don't have a corporate line on anything, so I'm free to offend whoever I wish. So I really wonder what's going on here. Are there any stats in the usage of this yet? Because I'm not entirely sure what problem it's solving. Right. Because interoperability has so many facets, there's so many concepts just in that one word. And this is one that I'm not sure solves anything. There is a tendency, I think, amongst mobile money people to think that people in emerging markets are somehow different. Whereas my view is they're just like me, just probably not as well off. And what do I do every month? I get my salary paid, I pay bills, I buy things in shops, and just occasionally I actually get cash out and use that, but pretty insignificant really. How often do I actually send some money to somebody? Well, the only time I do it is birthday presents for relatives when I can't think of what to give them. And secondly, the company lottery scheme, where I send them money once a month to cover it, because I don't want everyone else winning and me being left in the company on my own. So, given that, what does this achieve? Far more important, it seems to me, is interoperability really at the macro level, where you get money in. And that comes down to two areas. That's payroll and it's G2P payments. And the situation we're in at the moment is that if I'm doing payroll for my staff, and some of the staff are in one mobile money scheme and some are in another, I have to know and send it individually. Okay, I might be able to combine separate payrolls, but that's that's still a problem for me. What I want is to get one payroll list, hand it to my mobile money scheme or my bank, and say, it's your problem. And that, to me, is one of the big things that would really help mobile money, apart from the other end of it, the retail end, which I talked about yesterday, but I'm not going to go on about today. And I think that's just far more relevant than a P2P transfer, because we can already do that through the unregistered customer thing in most markets. So I'm sorry to offend, Gunnar, but...
But I mean, to pick up on a theme out of that, which struck me when I was listening to you, Gunnar, is this idea of sequencing. And at what point is it appropriate to bring in, to start focusing on interoperability? That was my initial reaction to this, because it is happening very early on. You're not seeing a lot of usage for P2P, and it looks like it's really designed for P2P. But Paul, what you've kind of highlighted is, in a sense, how certain use cases might make sequencing different, right? So for a one-to-many, so for salary payments or government payments, you may want interoperability at the early stages, because that's really what's going to drive that acceptance network, because you're going to have people on multiple networks who need to who all are responsible or get payments from a singular entity. But the retail side might come later. But what
Gives
are
people a reason to use it.
right? So I mean, but do you think you can sequence it? I mean, what are the indicators? And Michelle and Gunnar, I'd like to hear your thoughts on this as well. What are the indicators we're looking for to say now is when we need interoperability? As Indonesia kind of brings that out as a question. Told you it was going to be hard.
Yeah, so that was hard. Thank you. So I don't have an answer on indicators specifically. I think the challenge that we're working with here is, and kind of following Paul's line of thought, is what is the incentive, for different players to go and do different things, right? So what is my incentive to go and sign up merchants? What is my incentive to go and sign agents? What is my incentive to go and sign up these kind of bulk payees? Knowing that some of the money will flow out of my system or flow to other people's systems. So to get that commercial agreement right, I think is one of the big challenges we have, to make sure that you're incentivizing people to roll out accounts, but you're also incentivizing others to kind of build that ecosystem, to get the different providers, the bill payers, the bulk payment institutions, etc., all of them on, knowing that whoever's signing them up is getting a fee that kind of more than covers their costs, and incentivize them to do that. So that, I don't know what that number is. The more we kind of play with it, and the more we kind of, in South Africa, they've got a lottery, and their kind of tagline is, you've got to be in it to win it, right? So we've got to kind of start playing with those numbers, start seeing where they are, and then kind of adjusting them as we go to make sure that we're at the right level, and different sides of the market are kind of incentivized to push it forward.
So could you extract from that this idea that if you're looking at the incentive structure, where there is friction in certain incentives, where someone may be disincentivized to use an electronic system or otherwise, interoperability may be a solution to grease that friction a little bit? Because why have it? This is Paul's point. I mean, why?
So for me, I guess market structure comes into play a lot here, right? So in this instance, it seems like you're all struggling, and you're all looking for any way to make it kind of pick up.
Right.
Which is great for interoperability, but it's not, so in a sense, it's almost a vicious circle, or it's almost kind of, you're putting all your eggs in something which, as Paul's saying, is, what is the problem that it's solving, which is, it's kind of challenging. On the other hand, you've got a market which is booming, but there's one player which is clearly a market leader, and he's looking around and saying, now's not the right time for me.
Right.
If you guys do better, then, then you can come and talk to me. And as you know from the, we had that city ATM example, where there's a time when it all makes sense. There's a time when the smaller guys ideally will be able to, cooperate, and will be able to make enough, be big enough that it makes sense for the big guy to turn around and say, okay, well, now I'll open up.
Right.
And we just kind of, we're not getting to that point, and it's kind of hard to, how do we characterize different markets and understand better when it makes sense? And is the market leader missing something or not? So we have a number of kind of, for example, in Tanzania, we have Tigo who's arguing, the pie would be so much bigger for all of us if we could just interconnect.
Right.
And we haven't seen that kind of proven in this market.
Right.
For the bigger players to turn around and say, okay, let's do this.
Right.
I guess one last point is, we are seeing, interestingly, in South Africa, where we have quite an open provider who has allowed, the MTN mobile money, who's allowed one for the account to be opened up on a Vodacom SIM card, who's allowed airtime to be purchased, from MTN for any of the SIM card, so for any of the other networks. So he's allowing kind of more and more of these use cases on the other networks, even though they're quite large, or at least growing quite rapidly.
So Gunnar, I'd like you to pitch in here. I mean, in a sense, you're sort of being challenged in a sense. Like, so what's to be learned from the Indonesian context? Like, why now? What was the incentive behind it? What's the use case that they're trying to drive that demonstrated sort of a lack of functionality, which is sort of to Paul's point?
Yeah, I think the Indonesia example is interesting, not because it's a success now, but how they did it. And like I said, I think the challenge that many operators are facing when they want, or they think about how to become interoperable, how to prioritize which use case and which technology to choose is, well, how much are they going to give up? What is going to happen to cost? What is going to happen to real time? What is going to happen to their control? And I think it's good. One way to kind of test the waters is to look at what other operators did.
Right.
And this is what we hope this case study, this snapshot will provide. But going back to the opportunity of interoperability, I think P2P is very versatile. I think we see it's out there in the market. It's marketed as send home, or it's marketed as something else, but when you place it in the market, it's used for many different things, right? And it's used for business purposes, and it's used for social purposes, and sometimes for some people use it for a mix of both. So I think the value for just looking at the use case of account-to-account interoperability, I think it is that there's an opportunity there when people get more mature and get a bit more advanced in their usage. And looking at a market like the East African markets where mobile money is really successful, and you have a couple of successful deployments next to each other, 95% of all the transaction, even if their market share is just 10%, 95 or 96% of all the transactions are on us.
Right.
So it indicates that it's not, there should be an opportunity in more advanced markets to trigger additional growth of transactions.
So it's interesting, because now we're talking about growth and scale, and with that comes to a degree of risk. In the context of wallet-to-wallet transfers, which is the P2P aspect you've touched on, what, between the three of you, I'd like to hear your thoughts on what do you think the risks are that are demonstrated, and then perhaps how to mitigate them.
Before we move on to that, can I just talk about P2P in general? P2P is the tool that we have in most schemes, and because it's the principal tool, it gets molded into so many different uses, as Gunnar has just suggested, including the retail environment. And because of the way that the business models are put together for most mobile money schemes, the P2P transaction tends to be tariffed quite high, because that's where the revenue comes to subsidize all the cash in and cash out and all the rest. So that means that it's not really very well suited to some of these other transactions, and it drives down, it makes them infeasible in some ways, and drags down on pickup. And I think that we need a little more sophistication in the underlying tariff models for most mobile money schemes, for them to be adapted to other transactions. And this is just one of the reasons why I think it's holding back retail and various other things as well.
What do you mean by sophistication?
Mobile money operators, typically mobile operators, are great on developing tariffs for airtime and adapting them dynamically and being very inventive. They're not when it comes to mobile money. It tends to be, this is it, this is the 30 shilling transaction, that's the 90 shilling transaction. That's what you pay. No flexibility, no adaptability.
Why not? I mean, because this is speaking right to what you were
because
saying.
they're not banks, they're not payments organizations, however much they dress themselves up. They're not really sophisticated enough or experienced enough to understand that they could actually apply the dynamic pricing that they give to airtime into the mobile money environment as well. And this is one of the things which has held back things like insurance and savings and loans. The fact is, most of the mobile money operators, where they've ventured into that at all, they attach a P2P tariff for all the funds in and out, and it just kills the business model.
To give you an example, which is, I mean, if you could think of the customer value proposition for sending money over space, you know, a typical send money home type transaction, where it's particularly difficult to do it in any other way, and there's all these risks involved if you want to do it in cash. And you compare that to a face-to-face transaction where I have cash and you accept it. You know, now we're thinking we're going to charge you the same for both of those. So whether you use, you know, towers or geospacing, whatever it is, you could think of a way that, you know, face-to-face transactions are priced differently to compete to cash, and over-distance transactions are priced as the way they are. So you could introduce a whole new kind of, you know, payment type or use case without impacting the revenue that you're kind of currently earning on a different.
Are you then, in the context of literacy, which is something that Yasmina's panel sort of touched on, now just making it a little bit more complicated for the consumer? So hold on, there's a different price if I want to pay somebody when they're out there versus if I'm face to face. I mean, how do you balance? I mean, maybe that's the definition of sophistication, is balancing the marketing along with the pricing structure. But I mean, aren't you sort of going down that dangerous path of just making it too complex, which a lot of operators tend to do in the early stages?
I'm looking at you.
I guess the simple answer is you're right. I mean, we're going down there is a dangerous slope, but I guess coming back to Paul's point is, are we playing enough with that? Are we trying it enough? So in the same way as you would do with airtime, and you have different pricing for weekend, different pricing for nighttime, different pricing, it's pretty complicated.
Right.
People figure it out, and in some instances you swing back to a one tariff, and in some instances you don't. So they kind of sophisticated enough to, on a dynamic basis, figure out what's optimal. And I guess I haven't seen that same level of sophistication in the mobile money
And
space.
I think there's a tendency to underestimate the customer as well. I've certainly been involved in discussions around tariffing where it's assumed it's got to be very, very simple or people won't understand it. And then you look at their sophistication and their use of airtime tariffs, and you think, no, these people really get it. They know how to optimize the use of their money. And we should respect the customer more.
So I'd like to harness, unless you have anything to contribute to that,
No, on flexibility on pricing, I think it's especially important on the first area that I mentioned before, when companies are using mobile money to accept or to disperse money. I think that's an area where, if there's more flexibility in who's paying who, is sometimes the customer wants to absorb the cost, sometimes the customer, they want the customer to take the cost, etc. I think that's an area where we really want to have that level of sophistication at the platform level, so that operators can offer more alternatives for different size of companies, different size of services, because that's the need, and the sophistication is not there in most cases on the platform level to do that.
But it's
I think on topic of promotions and promoting different transaction types, I think it's from what we've seen there's been a couple of promotions where you do P2P for free, for example,
right,
and even allow the following cash out for free as well. And I think you do see a spike in usage over time. But as far as I've understood from talking to the people involved, it was difficult to make those gainings last.
right. So that's an interesting point. If I can paraphrase, and Paul, tell me if I'm wrong, what I'm hearing in a sense is that there may be a sort of platform level infrastructure precondition that enables a degree of sophistication, which is sort of picking up on what the gentleman from Ripple was saying in terms of Instagram, right? They leveraged this ecosystem that allowed them to focus on the value add and provide something that in simple form was actually quite sophisticated. Would that be a correct characterization in terms of how do you enable that sophistication? What are those preconditions?
Yes, and I think part of that lies in the platforms that we're all using for mobile money. At this moment, they're not really as flexible as we'd like them to be. I mean, it's known that I was involved in the design of M-Pesa, and at the time I was very, very proud of this, but in terms of what it's doing now, we should be better than this.
Right.
We should be offering more flexibility, be more adaptable.
Right.
We should have moved on, and I think the market has really stood still, and it's time to get more sophisticated, more dynamic, and the platforms have to be developed in order to allow that to happen.
One of there's kind of four main benefits that we think about when we think about interoperability. So we don't see interoperability as a kind of an end goal of itself. We see it as kind of a means to an end, and whatever that end is depends on kind of the government or whoever it is that's introducing that. But one of those objectives is this kind of ability to specialize. So this increased competition as a base on that, which kind of speaks to the point that Danny was making. So as a new entity, I can come in and I can focus on either issuing accounts, or I can focus on just rolling out infrastructure or whatever that is, because the kind of ecosystem exists to allow us to just kind of build off what others have already invested in.
And that kind of highlights the deepness of the roots of interoperability, right? I mean, it's not just about the business model or the incentives. There's sort of an infrastructure component to it. This idea of platforms and various platforms having to operate together. And again, as CGAP's work and the distinction between interconnection and interoperability, you're beginning to sort of wiggle between those two lines. But when we think about that breadth of issues that it relates to, just going into the regulatory policy space, regulators tend to have an opinion, at a minimum, on what should be done on both of those. I mean, you use Nigeria, for example, where they do set interchange, and yet equally have really pushed forward development on the infrastructure, sort of making certain relatively activist mandates that aren't necessarily horrible in the context of the technical capacity of the infrastructure. Yet on the model side, they're equally activist. Not making a comment good or bad, but the reality of regulatory intervention. For the three of you, I'd be interested in your thoughts. You know, where is intervention necessary, and where does it step too far?
And from a regulatory intervention, I think the regulator plays a very important role in this, and I think intervention should always happen in dialogue. And we've had some examples where that dialogue has been missing, which isn't really fruitful for the customers or for the companies involved, and the regulator tend to not really get what they want at the end of the day anyway. But of course, they need to make sure that all the risks, that no systemic risks are involved, and if risk is introduced, it's their job to point it out and to supervise and make sure that that risk is mitigated properly by the players.
So just to touch on that, how does interoperability work? Is sort of, where is the systemic risk in interoperability? I mean, where is that connection?
I think what happened in Indonesia makes sense, the way that they keep the fully prepaid environment between the three mobile money schemes led by the three operators separate, and they don't have the same solution for that compared to sending money to banks. Because if you start mixing e-money and real backed up money, in real money usually there's a settlement delay, right?
Right.
So at least now the institution are open for certain settlement risk, etc. So
the preconditions to that is having in existence an e-money type account that allows you to play off that risk.
For example.
Because in the absence of that, you may be.
Or if you join a client of a clearinghouse model, you have to have a minimum balance with that who operates that clearinghouse, for example. So there are ways to mitigate
solutions.
But that could be one area.
Right. Paul, on the regulatory question, you have plenty of opportunity to offend, so.
Yeah. No, I love financial regulators. They're the only people that stand between my bank accounts and the Wild West. They're doing a great job. I've had some depressing experiences with regulators. Spoke to one who said, on no account would we allow M-Pesa in our country. I thought, why? What harm has M-Pesa done? It seems to be doing a lot of good in Kenya. Financial regulators have three important roles in my mind. First of all, the stability of the economy. Then there's consumer protection, make sure that we don't lose our money. And finally, financial inclusion. And in my experience, far too many only read the first two lines, never get down to the third one. And that's behind that's the result, I think, of some of the excessive regulation you see in some countries, which seems to be aimed at preserving the status quo and not allowing new entrants in. And that can be pretty frustrating. The Kenyan regulator was an exception to this. He was so accepting, I think because, at least in part, because he was included in all the conversations from day one.
Right.
I think the idea of that we've come across in some schemes where you develop the scheme and then the day you launch is when the regulator gets to find out about it. It's just crazy.
Right.
When's the right time to regulate? Well, I think possibly the Kenyan regulator has left it a bit too long now.
That was my next question.
The Nigerian regulator, he got a bit carried away.
Right.
I think he's imposing regulation that you'd love to see in a developed economy where there are multiple market players who are mature, who have a profitable service and who are competing against each other. But if you apply that regulation too early, you just kill the market.
Right. But what's interesting about interoperability is it does really seem to require sort of a visionary view on all parties. You know, I mean.
Yes, but you have to have revenues in order to invest. You cannot go on imposing cost and never actually achieving scale.
Right.
a new mobile money scheme needs to get to the point where it is at least operating profitably before it can start to drive down the margins, which is the inevitable result of interoperability. If you require me to share my agents, I'm not going to invest in agents anymore because they cost a lot to set up. So you do that too early, then I'm not going to have an agent network, and neither is anyone else. And obviously we've seen that in certain countries.
But what's it look like in Indonesia then? I mean, arguably that's what they've done. They've come in right out of the gate, agreeing on sort of sharing infrastructure to a degree. Are you seeing that impact that Paul just highlighted?
I don't think so. I don't think actually, if you just look at if you isolate the use case of allowing transactions to flow between schemes, I don't think it undermines that much of the business model, even the customer stickiness of a pure mobile money play, because you're just replacing the voucher with an actual credit of your account instead.
Okay. Yeah.
And it goes back to what you talked about in the beginning, which is why then it becomes a matter of who's compensated for and how's the compensation going to look like.
And that's an important distinction between a cash out at agent use case versus a wallet to wallet use case.
Oh, yeah.
Exactly, and I think agents are particularly difficult because they are very much building trust, they're building your brand, they're educating the customers. There's really a sales and distribution and education network you're building. It's not only a cash in, cash out network.
Right.
So I think it makes sense in the early days in Indonesia to allow the operators who want to invest and are serious about mobile money to do so and feel that they can build invest in a distribution system that will add value to them.
Right.
So I think the fact that that's off the table for now is probably a good thing. It probably ensure further investment.
Right.
And we're not going to see, hopefully we're not going to see what Paul mentioned, which is if no one can own it, no one wants to invest in it.
Right, and we see that everywhere.
I just wanted to add, I mean, I think that distinction you made between the kind of sales and origination role of an agent versus the kind of cash in and cash out is key, right? So there's, how do you kind of have this agent sharing where you then go into an agent and they get to choose which account they're opening up for you, which doesn't kind of work. Whereas if it's just a cash in and cash out for an account which already exists, maybe there's it's maybe closer to, still further down the line, I agree, but, easier than the sales and origination. And then just on the regulation point, I think that the regulators often see either this kind of Nigerian role, which is let's step in now and mandate, versus the kind of Kenyan role that let's do nothing about this, for a very long time. And we kind of see this more along these principles maybe that Gunnar is referring to, which is like, let's engage with the industry. Let's kind of indicate what our preferences are. Let's kind of see what makes sense and keep close. And then there might be a middle ground, so it's not kind of one of the extremes, it's something else around there, which, we refer to it in some work we've done on kind of managing this interoperability rather than taking an extreme approach.
And so it seems, I mean, you've tossed out Kenya in a couple examples. It's almost as if, from the regulatory view, it requires to a degree a sense of a scenario analysis. So in our market, we happen to have a dominant player. What are the scenarios that could play out so Kenya didn't do anything in the beginning, which allowed Safaricom to sort of grow exponentially. Without having done that, what are the various scenarios we might see, one of which might have been sort of monopolistic behavior, et cetera? Do we want to pull back from that, or are we comfortable with that? There's no judgment there. You may want, because I mean, look at the innovation that's happening around the M-Pesa platform, because people can have access, because it's ubiquitous. I mean, in a sense, could that have happened if the CBK got involved earlier and mandated interoperability? We'll never know without the counterfactual, but it's, in a sense, do you feel regulators are playing that scenario analysis, saying this is kind of what we want to see, here are the options? Is there dialogue with the industry saying, how would you play out against these options?
I think regulators are, I think because mobile money gets so much attention and so fast growth, especially in East Africa, I think regulators have more pressure to be really regulating certain areas that perhaps in other payments, like prepaid cards, are left for the industry to decide upon completely. So I think mobile money clearly has a special role or special relationship between regulators and mobile money.
Right.
As long as it's in dialogue, I think that's appreciated by both players and the
Right.
regulator.
Right.
I think mandates should be done carefully.
Mhm.
Yeah.
Yeah.
I don't think it's fair to say that, or to imply that M-Pesa only grew quickly because of the regulator's attitude.
Right. No. That's fair. Yeah.
I think the regulator's attitude was important in allowing it to grow, but the same regulatory environment applied to everyone. The regulator came down hard on a number of people who didn't play the game,
Mm-hmm. Mm-hmm.
didn't keep them informed, didn't put all the controls in place that the regulator would require. And frankly, more fool them. If you're going to get into payments, this is financial services. You've got to play by the rules, whether
And
you're directly regulated or not.
And I think that's a story that's often not heard is that Safaricom, if they did anything, they literally went through the checklist and said,
Yeah.
we will do this, no problem, we can
Oh,
add that, et
Safaricom
cetera.
didn't. We did.
Right.
We went through the UK law actually.
Right.
Took that,
Yeah.
put it in a Kenyan context, and said, do this, do this, do this.
So the last question, and then we can open it up to the audience for some questions, is, and this is directly to you, Paul, and then we can open it up to the other two guys. In terms of other models that have, an opportunity here, other use cases, particularly speaking to your Wingu Pay product
I'm trying
or
not
idea.
to mention that.
Well, I'm going to call it out. Could you give the group perhaps just a 2-minute download in terms of what it is, and then how you perceive that to be a better alternative, or an alternative, if not necessarily a better one?
Of course it's better. Now, it's all about retail, because we started looking at statistics for usage and looking at the lack of profitability of many of the mobile money schemes and thinking about how they make their money. And mobile money schemes are different from banks. Banks make money out of debt and deposits from customers. Mobile money schemes make money on transactions. And everything is really founded on P2P. That's where all the transactions come. The problem is that in most countries, there really isn't a big P2P market. So therefore, that's the reason that most mobile money schemes are not profitable. And that's a sad truth, I'm afraid. So then we started looking at how people in emerging markets spend their money. And we found a surprisingly constant, roughly 66% of income in the lower levels of society, 66% of income is spent on food. Now we thought, well, these guys don't have access to refrigeration, so they must be buying food every day. So if that's the case, there's 7 transactions a week, which are completely unavailable to mobile money at the moment. And that's, even if in the best case of a P2P transaction of you're receiving funds once a week from relatives, that's a 7-to-1 ratio there. So if mobile money is going to do anything about getting to be central in ordinary people's lives, they've got to address retail. And most of the mobile money solutions out there, and I include M-Pesa in this, are not really suited to the retail environment. You go into a shop, you bring out your phone, you find the application, you find the menu item for paying a merchant, you look around the shop for the merchant ID, type that in, enter the amount, send it off, and then we can all sit and wait for the messages to come in to confirm the transaction. But people actually go into shops to buy things, not for the joy of using mobile money. So what we're suggesting is that there is a better solution, and we've come up with a model which we call Wingu Pay, which is Wingu is cloud payments. That's where we're coming from. And it's about doing away with the switch entirely, and instead we have a payment system which is interoperable, which is a layer on top of the mobile money schemes, which brings those retail transactions to both the merchant and to the mobile money schemes. And they have to do very little in order to take advantage of this. And we're trying to pilot it. We're trying to find somewhere to pilot it. So we're looking for a couple of mobile money schemes in one country. A couple of mobile money schemes, ideally a couple of banks to show that it applies to banks as well. We're looking at maybe a small-scale pilot of, say, 1,000 customers. and then we can prove that A, it works, and B, nobody loses any money. And it's all about tap and go payments for emerging markets. And that's the potted story.
And so, Michelle, I'd like to get your thoughts on a certain aspect of Wingo Pay, which is this idea of getting, in order to enable these retail payments, you have to circumvent certain aspects that are adding basically margin to the cost, switches, processors, et cetera. And it's not so much agree, disagree, but what are your thoughts on, you know, the realities of having to sort of create a parallel system? I mean, it sounds absolutely right.
Yeah, I mean, I do think about, I think about this quite a bit. So where we want interoperability to exist between mobile money players, or, you know, more broadly, do we think about that taking place in the kind of Indonesian context? Do we think about it taking place leveraging ATM infrastructure, or, you know, whatever that switching environment is that exists in the banking infrastructure or banking space? Or do we think about it in a new type of infrastructure that exists between mobile network operators or mobile money operators? And which of those kind of, you know, what are the benefits or what are the situations or characteristics of a market in which one of those would be better than the other one?
Right.
You know, so is it a market where cards haven't taken off, or you know, that infrastructure doesn't exist? And there's more to it than that as well. So, for example, in Nigeria, again, coming back to that, the switch is owned kind of 97% or something like that by banks. And now you're telling mobile money operators to switch through that infrastructure, and you know, whereas initially it's kind of set up as a utility to kind of price at, you know, cost plus basis to its, you know, to its shareholders. Right. And now you've got a whole bunch of new kind of stakeholders.
I'm not suggesting that at all.
No. I'm not talking about the Winnipeg example. I'm talking about the existing switch. So if I understand correctly, you're talking about it would be a new kind of infrastructure. It wouldn't.
Well, the
wouldn't
thing about
leverage
mobile money schemes is that the basic fact is that all the money's all in the banking system anyway.
Yeah.
It's not somewhere in some special envelope somewhere.
Sure.
It's in the banks.
Yeah.
So if a mobile money scheme wants to send money to a bank or to another mobile money scheme, it's a messaging layer on top between those schemes, but the actual financial transfer is between two banks and will remain so.
Yeah.
So it's not new members to the ACH or anything like that, which I agree would be wholly problematic.
Yeah.
And I'd like to pause there just for the sake of time to open it up to questions. Let's see, you want to add something real quick?
Yeah, no, I think Wingo Pay, I think it's a great initiative and a great concept. And I think in the US, for example, I think I read that $65 billion are paid annually in just fees for paying with cards at a retail location. And a lot of the innovation that's happening here in payment is about circumventing that and making that cheaper, making that more affordable, like Dwolla and what Ripple is coming up with it's a low cost or free transaction protocol. So it would be a shame to kind of impose this model on emerging markets where mobile money can facilitate a much more low cost alternative if implemented correctly, and a solution like Wingo Pay could facilitate that.
And I think that's kind of the message, in a sense. Interoperability and its complexity is often most complex because you're trying to get so many different players to share what's already a very small slice, and the total add after that is actually too expensive for these retail type payments that you're talking about. And assuming that the future of mobile money has an interoperable slice to it, an interoperable component which is necessary, Wingo Pay just kind of puts the spotlight on the fact that we may need to think very differently about existing infrastructure, which is based on a legacy model, which is a common theme across a lot of aspects of mobile money generally, but in the context of interoperability, it appears to be quite a sensitive button, because this could be one of the critical barriers. Just want to end there for our discussion and offer the audience any opportunity. We have a gentleman here in the middle.
I'm going to say that I think that this discussion is probably one of the most frustrating out of this entire 2.5-day sessions, because it really demonstrates the mobile money programs that are either telco-led or telco-run unwillingness to learn from what already exists. This is something that banks have done and do, and realize that interoperability is not just about from one mobile money platform to another. It's about interoperability within the financial system. Where does the money exist? It exists in the banks, just as Paul said. How does it get to people in mobile money platforms? If there's no interoperability between the existing financial world and the mobile money financial world, or even if we can talk about two distinct financial worlds, we're not solving a problem, we're creating a problem. And these are challenges that I think banks and financial institutions want to help, and they want to participate in. And they're willing to lower their costs and change the structures, but all of it's set up. So to recreate something that already exists, to me seems very, very confusing and complex. The bottom line here is mobile money is fighting against what? Not existing banks. It's fighting against money. And when we talk about interoperability, there's nothing more interoperable than cash, right? It is the most interoperable method of payment that you can use. So if we are looking to increase usage, increase transactions, we can't compete from one bank to one bank, from one telco to one telco. Interoperability really has to be seen as standard. And there are a lot of interesting regulatory movements that are happening in Latin America, and this is my area of focus, that are putting interoperability at the forefront. The Peruvian model that is being developed right now says very clearly, everything must be interoperable from day one, because that's the only way that it's going to make sense. And so long as both banks and telcos and mobile money operators can learn to really, the term that I like to use is to co-opete, so co-opetition, right? It's compete where it makes sense, but cooperate in order to make everything work. That's why all of us, the 208 programs that exist, are facing all of these challenges. And so, in my view, the interoperability is not a matter of when or why or how, it's a matter of necessity. And so my question to you is how do we get all of us to realize that, this is key to creating something, that a key element to a viable business model. It can't be seen as competitive to it. And how do we learn to compete where it makes sense and learn to cooperate where it makes sense?
Hey, at least I didn't ask the hard question. Any thoughts, gentlemen?
Okay, why not? Interoperability, I agree with you. It all depends on what you mean. There isn't a requirement anywhere in the world that if I open a branch, Barclays Bank opens a branch, then the customers of every other bank must be able to use that. And that would stop me opening the bank branch. And yet, that is the kind of edict we get from regulators of mobile money schemes. In terms of sending money from one scheme to another, I agree with you entirely. It's crazy not to do it from the earliest possible stage. It all just comes down to what you mean by interoperability. And there's at least 4 definitions that we've come up with. The one that really gets me is that one about sharing branches. Anyone got a more erudite answer?
I go for it.
No, I'm just going to say, I think we're doing a lot of work trying to show the benefits and what interoperability can mean. And we've been using the word use cases, and you mentioned you had 4 different kinds of interoperability you have identified. And I think one way to, or one good thing about the Indonesia example, it shows that they went through that process and they said, well, it can mean many different things. What do we want to prioritize in this market, and what do we want to implement first? And they started with P2P. They're going to go into airtime sales and merchant payments later. Or, I mean, it's in the roadmap. It's being developed. And I think that's a good approach to make achievements in the market. And I think we're trying to show that, the increase of transactions in the case of P2P, and like Paul points out, on agent it's much more sensitive, it's much more complex, especially in the early phases when you want to see investments in the space. But there are other pros and cons for the different use cases. But
And that's where mobile money is quite interesting, to touch on your point. There are some things that we're just doing what's always been done, just differently. The UI might be a little different, but otherwise it's really the same. There are other things that are completely new. And I think in these conversations, just more broadly, we can confuse those. What is new is this co-opetition aspect. Agent networks at the retail level is completely new in the context that we're envisioning, because M-Pesa has given us a little bit of a sense of what it could do. But we feel like it could do more. That's completely new. Even banks haven't cracked that. I mean, the average cost of a bank branch before the equity model of really reducing the branding and all of that was, $150,000 to $250,000. You're not going to roll out, thousands upon thousands upon thousands of those to do $1 transactions.
You've just hit on a really important point, and this is why banks need to embrace more in the mobile money space, because of that cost of opening branches. That means they cannot expand outside the cities where they are established. They simply cannot reach the mass population because the cost is just too high. Mobile money gives them the capability, and that's why they should be engaging and cooperating and interoperating with the mobile money schemes.
And to build on that, this question of what we've already done in the urban space, there has been cooperation, ATMs, through an evolution, as it were. So the question is now, can we take the cooperation that developed in the urban context in order to achieve more inclusion in the less urban context? And that's purely, this is reducing the conversation down to proximity, which is only really one aspect of all of this. But so it's a great question. It really highlights a lot of the complexity.
Yeah,
so final words?
Yeah, great question. I mean, you make a lot of sense in a lot of the points you make, and I completely agree with many of them. I guess the question is, in some respects, so for example, there's a timing issue, so banks have kind of nailed the ATM interoperability, but in New York or, with Citibank, it took kind of 17 years before they finally agreed that this made, economic sense for Citi. So I guess mobile money is just so much earlier, and when it comes to agents in particular, it's that, kind of when does it make sense for us? And then I guess there's also a question around how effective that interoperability is. So what's our objective, and then are we achieving it? So we have, again, this example in Nigeria where, where ATM fees have been taken away. So now there's no incentive for an issuer to kind of roll out cards, knowing that these guys are going to do mostly ATM withdrawals, and they're not going to get any funds, but they're going to have to pay the interchange away to the acquiring bank. So what you're getting is a lot of messages that say, failed transaction or technical issue or something along those lines, just until, you're not getting that effective interoperability. And we see that in a number of markets. Either it's the off-us pricing, which is kind of wrong, or there's some issue. So I agree with you that a lot of it's been solved, and maybe the kind of next step is how do we solve it to that final kind of optimal effective level that gets the benefits that we want to see.
Sorry, I've had the mic for a while. Can I?
Sure, didn't even
Yes.
see you over here.
I think the point I wanted to make is that I agree with the gentleman that just spoke, even though I didn't actually see who he was.
Which makes
That it's called mobile money, and it creates two very dynamic benefits, especially in the unbanked societies. One of which is that the banks have not been able to cater for the population. But you have a unique success story amongst all the GSM networks, where they've been able to roll out dealer networks effectively, sales and distribution channels, and penetrate all the way through the countries. So it is vital that there's interoperability between the networks to provide that accessibility to banking through their channels. At the same time, to interconnect with the banks who already have the existing platforms for moving money around. So that should be a prerequisite of rollouts. And you have, now here's the point of interoperability. When you have those two things that come together, you then create a platform and a surrounding where retail products can be placed onto that platform, creating a demand for the use of mobile money. Like in East Somalia, where some cases you have government mandated, whether it's buses or taxis, that have to be paid through the mobile money. That's how you get an uptake. That's how you get usage. And when you talk about the commercials around mobile money, it's meant to be on transactions. It's very simple, and we're at the other side from a mobile money sender platform, waiting and looking for these guys to get their act together so that this $500 billion remittance, of which the formal channels like Western Union are only catering to 25%, we can grab some of that, formalize it, structure it, control it from a fraud and regulatory perspective, and send it back into the unbanked, in the emerging economies.
Thank you. And I think and that's the last question. I'm sorry, we've got to finish. And I'd like to thank the panel. And here's a concluding thought. What you've just outlined, sir, is in a sense a vision. This is how it should work because there's a system out there that exists. We have a use case, an opportunity, a market out there that could gain substantially from it. But it seems to be in the context of this discussion, what we've really uncovered is being more specific. What do we mean about interoperable versus interconnected? What do you mean by effective interoperability versus theoretical? Does it really matter if it costs too much for me to withdraw money from an ATM and I don't use it? Then it's really not interoperable if I don't use it. What is the litmus test for success in interoperability? So it seems as if what we've done is we've clearly outlined what should work because there's a precedent out there. We've clearly identified where some of the obstacles are because we're doing something completely new. The question is now, can we isolate what's old and we can leverage that? And can we isolate what's new and really takes new creativity and ideas, innovation, and challenges and risks? And we're just going to throw money at this and hope it works because I can't think of anything better to do. But we all agree on that, and that's okay. And it seems as if we could be a little bit more specific in these evolving discussions on interoperability. We'll probably go a little bit longer because Indonesia presents some really interesting examples of co-opetition in a sense at the very early stages. And that seems to be almost kind of in a sense aspirational for a lot of other markets we're working in. So I'd like to thank you all for your time, for sticking it out to this end, and thank the panel very much for your entertaining the hard questions. Safe travels home.